This is one of the biggest AI scams in the last decade, and it's important for us to speak about on this channel because we need to understand what's going on in AI. It's going to continue to become more and more important in all of our business lives, work lives, social lives, everything. Most importantly here, how can you make sure that you don't get caught up in the next one? Because here's the uncomfortable truth wrapped up in all of this. We are living through an AI gold rush. Startups are raising billions of dollars in valuation, and these are skyrocketing more and more. Everywhere you look, you see the same promise. AI is going to change everything. But history tells us something a little different. Every gold rush has its scams involved. Every boom has its frauds. And every wave of innovation has its wolves that are dressed as visionaries. And one of the clearest examples in AI is Builder.ai. On paper, this was a dream company, a London-based startup promising to make building apps as easy as ordering a pizza. Microsoft backed it, SoftBank backed it, Qatar's sovereign wealth fund poured cash in, and at its peak, Builder.ai was valued at $1.5 billion. But here's what most people didn't know. Under the hood, Builder.ai was a house of smoke and mirrors. Its much hyped AI engine wasn't really AI at all. Most of the apps were being built and coded manually by low-paid developers overseas, so the revenues were inflated. The growth itself was staged, and eventually the entire operation collapsed under investigations and lawsuits and financial reality. But we all need to care about this, not just because of the money, but because it isn't just about one company here. It's a blueprint for how scams hide in plain sight, and how even the smartest of investors, who we just mentioned, some of the biggest corporations out there, and thousands of customers, of course, end up getting fooled, and how it could ultimately happen to them, and therefore it could happen to you. See, that's why this breakdown actually matters. We're not just going to rehash what Builder.ai did wrong, we're going to extract the lessons, right? What were the red flags? How can you spot a scam before it's too late? What do we gain by studying this case study? Because the real benefit of this video is simple. After watching, you'll be sharper. You'll know what questions to ask when you hear that shiny pitch about AI. You'll know where to look for cracks beneath the surface, and you'll be better equipped to avoid wasting your money and your time or your career on the next Builder.ai. So let's start with the illusion. Every great tech scam begins with a powerful story, and Builder.ai's was simple, it was seductive and seemingly unstoppable. The company's pitch was that you didn't need to hire expensive developers or to wait months to build your app. Instead, you'd describe your idea in plain English, and their AI would basically assemble 80% of the work automatically for you. That claim alone was enough to make the headlines. After all, software development is costly, it's slow, it's complex. If AI could really automate most of it, that really would change everything. Not just for startups, but for entire industries. The messaging was so strong that it spread like wildfire. The lesson here immediately is if it sounds too good to be true, often it is. Now, caveat. AI is getting better every day. But these are the sorts of things we're looking out for. So tech publications were all of a sudden hailing Builder.ai as the future of software. And so investors were comparing it to Shopify for apps. And clients, of course, lined up, hoping to save months of development time and hundreds of thousands of dollars. But this is ultimately where things started to unravel, because behind the curtain, Builder.ai's AI wasn't generating real functional code. At best, it could match basic project components from a pre-written library, like picking out puzzle pieces, really. But it wasn't writing sophisticated logic or complex features. The heavy lifting, the actual software engineering, was then needing to be done manually by an invisible workforce spread across India and Vietnam and Ukraine and even Poland. Of course, often for low wages. This wasn't the autonomous software building revolution that customers were promised. It was human labor disguised as machine intelligence, and yet the illusion was convincing. Builder.ai's platform featured a friendly chatbot called Natasha, who would chat with customers, gather requirements, give instant project estimates. All of it presented as if AI was handling everything automatically. Progress bars filled up on screen and feature blocks slid neatly into place. The whole interface was designed to give the impression that automation was happening behind the scenes. So for most clients, many of whom weren't technical founders, that illusion, of course, was enough. They saw results on a dashboard and they assumed that AI was doing the heavy lifting. Few thought to then ask deeper questions, and that's precisely how scams like this thrive. They don't necessarily rely on outright lies, they rely on plausible illusions. It's this smoke and mirrors effect. Customers wanted to believe that AI could solve their problems, and investors wanted to believe they'd found the next big thing. Builder.ai simply gave them what they were already hoping was true. But here's where it gets even more interesting. The deception wasn't just technical, it was also psychological. See, most clients and investors don't have deep technical knowledge. They don't know how complex real software development actually is. So when a slick interface shows them a 80% complete progress bar, they don't question how that number's actually calculated. When a founder throws around buzzwords like modular AI assembly or automated code generation, they assume it's legitimate because it sounds legitimate. And that's the first big lesson of this whole story. Illusions are easy to sell when people don't know what questions to ask. If you're ever evaluating an AI product, whether as a customer or an investor, this is a simple checklist that you can run through. 1, ask for a live demo of the AI working without human intervention. Number 2, ask for a breakdown of what is automated versus what's still handled by humans. Number 3, ask what specific tasks the AI is performing and how it's different from traditional software workflows. If the answers are vague or overly complicated, or they rely on metaphors instead of just specifics, that in and of itself is a red flag. And for investors, due diligence is more critical now than ever. Builder.ai's core claim was that AI could build 80% of an app. Wasn't plausible in 2018, and any experienced software engineer could have told them that. But because investors were hungry for the next AI unicorn, they didn't ask those difficult questions, or arguably simple questions. So this is how illusions take root, when people's desire for the innovation outweighs their demand for actual evidence. And it's why Builder.ai's story was just getting started. The funding frenzy is a big part of why everyone fell for it. If the illusion of AI magic got Builder.ai noticed, what came next sent it soaring. The funding frenzy itself. This is where Sachin Duggal's skills truly shined. He wasn't just a founder, he was a storyteller. He knew how to make numbers sparkle and how to frame growth in the rosiest possible light, and most importantly, how to play to investors' deepest fears and desires. The pitch was irresistible. Builder.ai had supposedly bootstrapped to $24 million in revenue and was on track to $100 million within 2 years. Duggal showcased sleek demos, boasted of global offices, and pointed to high-profile clients like BBC and Virgin Group. He painted a picture of an unstoppable rocket ship powered by cutting-edge AI, and it worked. SoftBank jumped in, investing tens of millions of dollars. Microsoft signed strategic deals and provided resources. Qatar's sovereign wealth fund added credibility and, of course, deep pockets. With each round of funding, the company's valuation ballooned until it peaked at $1.5 billion. On paper, it looked like a juggernaut, and once in a generation company ready to dominate. But much of this growth was smoke and mirrors. Revenue figures were massaged with accounting tricks like round-trip billing, where money flowed in and out between related entities just to inflate the top line. Future projections were sold as if they were present-day achievements. And the supposed AI that wowed the investors, as we now know, wasn't anywhere close to reality. So why did investors, some of the biggest names in the world, fall for it? And the answer to that is basic psychology. Venture capital is built on risk, FOMO, the fear of missing out. It drives decisions as much as hard data does. And in the late 2010s, AI was the hottest ticket in town, and arguably still is. If you weren't investing in AI then, you were already behind. And when someone came along offering not just AI, but AI that could revolutionize $1 trillion software industry, investors didn't want to miss that chance, of course. Think about it from their perspective, SoftBank had already poured millions into moonshot bets, like billions at this point. WeWork, Oyo, Microsoft was desperate to be seen as a leader in AI after they'd lagged behind Google and Amazon. Qatar's sovereign wealth fund wanted exposure to the industries of the future. Builder.ai just offered each of them a narrative they could sell back to their boards, their partners, and of course the public. And Dougal knew exactly how to lean into those narratives. He wasn't just selling a product, he was selling a movement after all. A world where anyone, anywhere, could build an app as easily as ordering a pizza. A future where AI democratized innovation. Investors didn't just see a company, they saw a symbol. And symbols are, of course, very powerful. But symbols can also blind. Because while investors saw big contracts and glossy offices and a charismatic founder, they didn't dig into the messy reality. They didn't demand technical audits. They didn't scrutinize the financials with skepticism. They wanted to believe. And that's honestly the big lesson here. Big name backers don't guarantee truth. For customers, this is crucial. Just because Microsoft or SoftBank backs a startup doesn't mean that the product actually works. Sometimes even the smartest investors are just as caught up in the hype as everyone else is. And for investors, the takeaway is even sharper. Chasing momentum is dangerous. The bigger the promise, the greater the need for evidence. If you're hearing about world-changing technology, you've got to ask, can anyone outside the company independently verify this? Can the claims be demonstrated in real-world conditions, not just polished presentations? And it continues to get even more fascinating. I mean, Builder.ai wasn't the first to pull this off, and it's definitely not going to be the last. From Theranos in healthcare to WeWork in real estate, history shows us when a story is big enough and the pitch is bold enough, even the sharpest of investors can get swept away. And Builder.ai proved it once again. When hype meets money, scrutiny often just seems to disappear. Now, by the time whispers about Builder.ai's questionable practices started circulating, Dougal knew one thing: momentum was everything. And when momentum is slipping, perception becomes the product. So in 2019, he pulled one of the oldest tricks in the playbook. He rebranded. Engineer.ai quietly disappeared, replaced by a sleeker, more polished identity, which was, of course, Builder.ai. There's a new logo, new website, new tagline, but behind the fresh coat of paint, the machine stayed the same. The timing wasn't random. Skeptical questions were beginning to surface about how automated the system really was, why so many developers were needed if AI was working most of the heavy lift, or exactly how the company was hitting these huge revenue targets. But a rebrand done well simply buys them time. It resets the narrative, wipes away negative headlines, and lets you keep selling the same dream just in a new wrapper. And that's exactly what happened. Builder.ai doubled down on storytelling. Dougal leaned harder into metaphors. Building an app was now like assembling Lego bricks. Ordering software was as easy as ordering pizza. The company flooded conferences with polished demos and PR campaigns that showcased its futuristic ambitions. Meanwhile, behind the curtains, armies of underpaid developers were still writing code line by line, just as before. This phase reveals one of the most underestimated aspects of tech deception. It's brand theater. When the story starts to crack, a new name, a glossy keynote, and a sprinkle of jargon can actually make people forget the questions they were asking in the first place. Investors then felt reassured. Customers who might have doubted the original company assumed, well, this new one's going to have evolved. Even industry journalists chasing headlines often treated Builder.ai as a rising star rather than a rebranded operation under scrutiny. But branding can only carry you so far, because when expectations keep rising and promises keep expanding, the numbers eventually have to catch up, and that's ultimately where everything started to unravel. By 2022, Builder.ai's marketing machine was running at full throttle. The company boasted global offices and expanding client roster and revenue figures that seemed to continue to skyrocket. At face value, it looked like the next great AI success story, the one that would finally make software development accessible to anyone, anywhere. But beneath those glowing headlines, the math was beginning to break down. Reports started surfacing from inside the company, quiet concerns from employees about financial discrepancies, delayed salaries, mounting operational costs. Clients were complaining of endless project delays and half-finished apps. And when analysts tried to reconcile Builder.ai's self-reported sales with its actual market footprint, the numbers didn't line up. And here's where it gets even more interesting, because the deeper investigators dug, the worse it looked. Builder.ai had been inflating its revenue not just by a little, but by as much as 300%. The technique was textbook fraud, basically round-trip billing, where money is shuffled between entities to create the illusion of income. So it's basically fake transactions and undisclosed discounts and inflated contracts that ultimately were never fulfilled. So on paper, it looked like hyper growth, but in reality, the company was burning cash and losing ground fast. The facade began to crumble in early 2025 when Manpreet Rashia, a seasoned executive with a background in scaling tech companies, was brought in as CEO. His job was to steady the ship, but once he gained access to the books, the truth became impossible to hide. The revenue for 2024, which Builder.ai had publicly claimed was $220 million, was in fact closer to $50 million. It's a huge discrepancy. Cash reserves that investors believed were healthy were almost non-existent. Just $5 million in restricted funds remained. Projects were unfinished, liabilities were mounting, and investor confidence evaporated pretty much overnight at that point. The fallout was really swift and really brutal. Thousands of employees were laid off, entire departments were dissolved, long-term clients abandoned ship, demanding refunds or threatening legal action, and the investors who had once championed Builder.ai, including the giants like SoftBank, were left with staggering losses and an embarrassing lesson in due diligence. But perhaps the most striking part of the collapse wasn't just the scale of deception, it was how long it lasted. For nearly 7 years, Builder.ai had built an empire out of half-truths, marketing spins, and basically carefully curated illusions. And it worked in part because the world wanted to believe it. Investors wanted the next unicorn, customers wanted an easy fix to a complex problem, and the media wanted a feel-good story about AI that was reshaping the world. By the time reality caught up, it was honestly too late. Unfortunately, the human cost and what we really need to learn is often the part that no one wants to talk about. Because behind every flashy valuation and behind every headline about disruption and AI revolutions, there's real people. And when the illusion collapses, they're the ones that are paying the price. For Builder.ai, that human cost was huge. Across India and Vietnam, Poland, we talked about Ukraine. Thousands of engineers had spent years quietly doing the work the AI was supposed to automate. Many were working long hours for wages far below industry standards, and they weren't the faces on the website. They weren't featured in the press releases, yet without them the entire machine would have never even worked anyway. These were the invisible architects of Builder.ai's automation revolution. And when the company crumbled, most of them were left with nothing. Inside the company, it wasn't much better. Employees who had believed in the mission, right, had left stable jobs to join this billion-dollar rocket ship. Well, they were suddenly jobless. Entire departments were dissolved in a matter of weeks. Promises of stock options just evaporated. Years of work meant to build a future-changing product ended in silence. And then, of course, there were the customers, small business owners, bootstrapped founders, non-profits. Many had invested tens or even hundreds of thousands of dollars into apps that were never even delivered. Some received incomplete projects that they couldn't use. Others just lost everything entirely. To them, Builder.ai wasn't just a company, it was their shot at bringing an idea to life, and it literally vanished overnight. But the most sobering impact might have been on the industry itself. Because every time a company like Builder.ai collapses, it doesn't just damage those directly involved, it erodes public trust. It makes investors more skeptical. It makes customers hesitate. It slows down adoption of legitimate AI innovations because now everyone's wondering if they're being sold smoke and mirrors once again. And this is where the real lesson lives. This wasn't just a story about one company making bad decisions. It was about a system, one that rewards hype over honesty, velocity over verification, and of course, storytelling over substance. It's about how easily the narrative of disruption can be weaponized and how willingly people look the other way when money and momentum are involved. So, after everything, what do we actually learn from this? Now, the truth is, scams like Builder.ai don't work because they're sophisticated. They work because they're seductive. They sell us what we want to believe, a shortcut to success, a magic tool, a promise that this time technology will make the impossible easy. And in a world obsessed with speed and scale, it's an easy sell. But if there's one thing to take away from this story, it's this. You don't need to be an expert to protect yourself. You just need to know where to look and be willing to ask the questions that most people don't. I've got a simple checklist, same one top investors and operators use to avoid becoming the next big illusion. 1. Demand proof, not promises. Proof of product. If a company claims AI built 80% of their work, make them show you. Live, unedited, no humans being behind the curtain. If they dodge, they're hiding something, right? Number 2, follow the labor, not the language. Ask who's actually doing the work. If a company supposedly uses AI but is hiring thousands of engineers, it's going to be a red flag. So headcount, of course, counts. And then number 3, verify the numbers independently. Inflated metrics are very common, unfortunately. Whenever possible, cross-check reported revenue, customer counts, growth rates, external data. If nothing lines up, then there's likely something off. Number 4, watch how they respond to scrutiny. Real companies welcome tough questions. Scams deflect, they rebrand, or they drown you in buzzwords. So pay attention to how they behave under pressure. Number 5, never outsource skepticism. In other words, don't rely on big investors or famous founders or flashy press coverage because it doesn't really mean a lot. SoftBank, Microsoft, and others backed Builder.ai, and they still got burned. The bigger picture here isn't just about one company's downfall. It's about how we interact with technology and how easily excitement can cloud our judgment. Builder.ai isn't the first AI illusion, and it will not be the last. But if you can learn to question and to pause and to think critically, you buy into the story, or at least before you buy into the story, you'll be light years ahead of, honestly, most people. Because at the end of the day, AI isn't magic. It's very powerful. It's transformative. But it's still built by humans with all the flaws and incentives that humans bring. And that means that some people will always try and weaponize the hype for profit. Your job is, whether you're an investor or customer or just someone watching the future unfold, it's to stay curious, stay skeptical, and stay grounded on what's realistic. Because the next billion-dollar illusion is already being built somewhere, of course. It's being polished, packaged, and pitched to the world. And when it lands in your inbox or on your news feed, you'll remember this story, and you'll know how to see through that shine.